Pitching a stock like a top hedge fund analyst requires more than just having a good idea. In this video, I'll teach you the exact framework top analysts use at the best hedge funds in the world. First, I'll break down each step of the pitch, and then I'll apply it to a real stock example so you can see how it works in practice. Okay, so step 1. Lead with the conclusion and clearly state your variant view. No need to get into any numbers yet. Be as qualitative as you want. Step 2. Quantify your view in terms of KPIs and valuation versus consensus. Step 3. Provide evidence for your variant view. What data supports your variant view? Step 4. Analyze sentiment. How do investors and sell side feel about the stock? Step 5. Evaluate positioning. Are hedge funds long, short, or neutral on the stock? Step 6. Identify the catalyst. What event will prove or disprove your variant view? Step 7. Explain the setup. Why is now the right time for your idea? Remember, setup is a combination of sentiment, positioning, and catalyst. Step 8. Outline the biggest risk in your variant view. What's the biggest counterpoint? Give a rational explanation as to why the biggest counterpoint is unlikely to take place. Step 9. Provide the risk-reward analysis for your variant view. Have a bull, bear, and base cases with price targets, probabilities, and expected value. Step 10. What work should you be doing to gain incremental conviction in your variant view, or to track your thesis over time? Now let's apply this framework to CHWY, a $13 billion US retailer that sells pet food, supplies, and medication directly to consumers. It has a subscription-based and direct order e-commerce business model. Step 1 is our variant view, and we lead with the conclusion qualitatively. We should be short CHWY because the market is overestimating the health of CHWY's customer retention and its margin recovery potential. We see evidence that the business is challenged by declining customer engagement and limited pricing power. The top-line growth stabilization and the margin expansion story the market is pricing in is unlikely to materialize. Step 2. Quantifying the variant view. We are modeling 3 to 5% revenue growth and EBITDA margins of 7 to 8%, below buy-side consensus at 7 to 9% growth and 12 to 14% margin. Applying a 30x PE multiple to our estimate implies a fair value of $20 per share versus the current price of $27. Step 3 is evidence. Card data shows declining spend per active customer year over year in the first quarter, with churn accelerating, especially in cohorts acquired in the 2021-2022 period. Expert calls with senior operations executives indicate CHWY's logistics cost structure is unlikely to support meaningful margin expansion without further scale, which the business currently lacks. Channel checks with third-party logistics providers suggest increasing outbound shipping costs. Step 4 is sentiment. Sell side is generally bullish, with 11 buy ratings, 4 hold, and 0 sell. Median price target is $30, implying 10% upside from current levels. Buy side sentiment is somewhat mixed. There is growing skepticism, but no high conviction view dominating. Step 5 is positioning. Short interest is moderate, with around 6% of float, which means the stock is not overly crowded. Institutional ownership declined in recent quarters, suggesting waning conviction in the company. Step 6 is the catalyst. A timely catalyst window is the upcoming earnings in around 4 weeks. Step 7 is the setup. The stock has recently rebounded 25% off lows, but fundamentals have not improved materially, making it an attractive short setup. Step 8 is the biggest risk. The biggest risk is a short squeeze risk. A positive surprise on margins could lead to a technical squeeze. However, we believe margin upside is capped given the lack of pricing tailwinds. Step 9 is the risk and reward analysis. Here, you assess the potential upside and downside of your idea by laying out base, bull, and bear case price targets. You assign a probability to each outcome based on your thesis. Then you calculate the expected value of the stock price by taking the weighted average of those scenarios. We are short CHWY because the probability weighted expected value of the stock price is $20, which is below the current price of $27. Step 10 is the extra work you should be doing to gain incremental conviction in your thesis, as well as what you should be doing to keep track of your thesis. We should continue monitoring weekly traffic and transaction card data. We should also conduct additional expert calls with former CHWY operations and logistic team members. That's it for now. If you want a free PDF pitch template and a more detailed write-up of this full framework with a more in-depth example, I'll be sending it out to you soon. Just drop your email in the sign up link in the comments and I'll send it to you as soon as it's ready.